Hello, today is June 13th, 2020. Let's go over our calls. Look for the pattern with the early high. This is it. We hit a target of 30.56.69. If we're dropping all day, we said it might not work, but it did print, and it turned out to be a resistance level. Now this is a pattern which tends to close at the day's high. If it doesn't happen, failure is a straight line drop. And here's where we said that. Well, I got kind of tricked by this one on Friday. This sure looked like we were going to have a straight line drop. But usually if there's a straight line drop, you don't have a recovery like this, particularly on a Friday. We've now dropped all day from the open for 2 days straight, and we still can't manage a close under some lows, including a prior low we'll see later on. Furthermore, when you have the straight line drop, it's unusual to get a recovery like this, particularly on a Friday. When the market drops like this, you're not going to see retail customers going long. This rally was one of two things. One, it's a short covering rally before the weekend. If that's true, we should gap under this low. The other is it's professionals who think this low is going to hold at least in the short term, and the professionals are going long here. They're going to get paid off quickly, ideally by gapping and taking out Friday's high. So I think on Monday the odds strongly favor a gap and promptly moving outside of today's range. The odds favor the gap being higher, but of course, as always, if we gap down instead, that's killed before the open. During the day, we had an ultimate sell signal and a sell signal that's already played out. We think this DeMark stuff actually worked if you interpret this high here as being a loose interpretation of the stop. But this is a prior TDST line from here, and it's a support level. Support goes to and through by a bar. Prior TDST lines. This line here is 200-day moving average. Well, the weekends when we always talk about the long-term picture. If this was the top here, there certainly is a good Fibonacci argument for it. I'm still leaning towards it not being the top, but if we start dropping in spades, there is at least Fibonacci support for that. I still favor this interpretation, with this being wave A of B. For one thing, this is a sloping trend line. We've dropped through it in a straight line. Almost always you're going to retrace to this trend line, which should come further out here. Sometimes you only retrace to the point where the trend line broke. That's far less common. I'd still like to see us at 32.99-ish. The original drop we had from the February high was impulsive. This drop from this high doesn't have to be impulsive, but so far it has the characteristics of a three-wave structure, which is just a correction of this leg up until we undercut this low. You can still justify this being a correction of this rally leg. And don't forget, we have previously identified support here in the 2800s. So for now, at least, I'm viewing this as a correction. If we undercut this, then that was the real thing. That one we showed. We also have support from the 200-a-day moving average. We also have what I'm calling a cup with a handle sloping down. These breakthroughs with the handle sloping down just aren't sustainable. At some point you get a recovery. So I'm looking for a recovery because of this and because I want this trend line to be hit from below. This is volume on the E-mini contract. Here's a volume spike. If you go back, you'll see at least short-term volume spikes are associated with short-term lows. So we have another sign that that low, at least in the short term, is going to hold. Now I've seen some other accounts of other people where they think it's not the one I want, where they think this low is the low of wave 4, and this is the start of a new rally leg. I don't agree with that interpretation. I think this is a quick impulse down. This is a slow, non-impulsive corrective wave. And at some point, I think this corrective wave is going to end, and we're going to get another impulse that looks pretty much like this one. Doesn't mean it has to start now. Monday's pattern has the early low. We could gap up first. We have mixed signals. You know the rules. The odds strongly favor gapping and promptly moving outside of Friday's range. It's negative that the normally bullish pattern didn't close near its high, but if we gap and promptly overtake the high, that would reinstate the usual pattern. That's all we have to do, and everything is lined up for the recovery leg to start. It's positive. The day-long decline held over a number of relevant levels, including the 200-a-day moving average and prior lows. Couldn't take out this low. We also couldn't take out this low. Buy signals from Bollinger Band reversals on the NASDAQ McClellan oscillator and the volatility index. There's an excess of buying of puts. There's a high volume on the E-mini contract. All this is associated with at least a short-term low. If the decline is to continue, ideally we should gap under Friday's low, and if that happens, fine. Otherwise, the odds favor gapping up, having one final run to a significant high, possibly, not definitely, 32.99 on July 3rd. Markets closed July 3rd for the holiday. That means either July 2 or July 6th. The Independence Week is historically one of the most reliably positive weeks of the year. It makes some sense for us to have a top then with a final run up to the high. So we're looking for the pattern with the early low. I don't think this is the all-day drop. I think it's the pattern that rallies to the high. So I'm looking for a gap up and promptly overtaking this high. But as always, if I'm wrong, it's obvious from the open. And I'm always flat over the weekend. Pattern with the early low. I'm still looking for one final push-up and probably the last push-up until this corrective bear market rally concludes. But if we do gap down from here, I can explain it as the high being in, which isn't my preferred count, but I can't completely rule it out. We'll know from the open if we get what I think we'll get, a gap outside the range, whether I'm calling this right or not. And Still looking for one final rally to a high, but if we start dropping in spades, you can make the case the high's in. And that's today's call.